Here we go. Welcome, Dan. Good to see you again, my friend.
Hey, thanks for having me again. Hopefully we're going to do this weekly just to bring people up to date on what in the heck is going on.
That's the plan because there's
Got it.
so much going on this weekend in particular. I've got reservations to go camping at Lost Dutchman State Park, and then I I made a mistake of saying, we might not get to go to the state park because of if there's a
Oh, yeah.
shutdown. And I go,
Yeah.
well, no, wait a minute. Now it's a state park. They would close the Grand Canyon, but they won't
Yeah.
close the state park. So it just those little things that they do over there in Washington D.C. that just screw up your world.
Yeah,
So
I know. I had a laundry list of I just did my video and posted it this morning, and I'm trying to get bullet points, and it's easy. I hate to say it
yeah,
that way. You got government shutdown. You have student loan payments coming back due. You have inflation, which is here and has been here for a while. Some of the highest rates that we've seen in a long, long time. And then when I did do my report this morning, it was kind of intriguing because I went to Zillow, and a lot of people are like, "Oh, Zillow's information is just terrible because they're realtors and everything else." But you go through there, Hartford, Connecticut is up almost 10% this year in home values. And then you go flip on the other side and you have Austin, Texas down 10%. It's like, so it really matters where you live. And that's what I've been trying to tell everybody for the last 2 years. It's like, okay, parts are crashing, but they've solved, 100% appreciation in 4 or 5 years. So it's really relative to where you live. So when you start hearing, if you're in Oklahoma and you're hearing the San Francisco data, you could just go, because it's irrelevant. You hate to say it that
yeah,
way, but
yeah, and when you go back and look, I had a gentleman share with me the St. Louis Fed data on median home prices. And he goes, it's going straight down. How come? I mean, to me, that tells me we're already in a crash. And I go, well, hold on, let me look. Because I went into our data and St. Louis was only the second quarter. They didn't have the third quarter in there yet, where third quarter we turned up. But um, we turned up in Arizona, and we came down harder in Arizona and Nevada than what you see on the national average.
got it.
But if you just look at the chart and it looks like it's a straight down, but then you actually look at the numbers behind it, it wasn't as big of a decline. Because like I went back to 2008, we were down 53% from peak to trough, right? And so we were
Values?
only down like 17% for that brief period, but then we came back up and now we're up year to date. So
You're talking values?
yeah, yeah.
Got it. Yeah. So I know the number of homes is it's ridiculous. There's just nothing. And, most of our applications coming in now, people are building houses.
Yeah, that's what I'm seeing here. And the number of listings that we have are finally starting to climb, though. And
Really?
but it's not climbing by much. New listings went up by about 100 today, which, look at that. I mean, when did 100 homes really
I
matter
know.
in a market?
How's your market normally seasonality? What do you usually see this time of year? Do you have the snowbirds coming in and trying to buy up, or do you have kind of a lull in sales, or is it just normally is your market? See, here in Illinois, I'm in Chicago, people don't buy in December, January. One, you have the holidays, and two, it's just too damn cold. You know
Yeah,
what I mean?
well, October picks up, but it's not picking up this year. And it picks up for the opposite of what you just said, because somebody made a comment this morning, goes, I'm seeing a lot more open house signs. I go, yeah, because it's not 115. You know, you can
Oh, I get
actually
it.
walk around and put out open house signs without dying. And so in October, October's beautiful out here, Dan, especially in Sedona.
Really?
That's their wedding season up there. You can count on it being 80 degrees and beautiful and lots of scenery. And so seasonally, October has a pretty decent real estate market because people are buying and selling before Thanksgiving, want to get in by Thanksgiving.
Right.
But we're just like everybody else in November, December, whether snowbirds are arriving in or not, it's dead.
Right.
And but our contract activity right now is as low as it's ever been. I mean, it's 2,400 every 7 days, and it hasn't moved.
Really?
It just has not moved.
And is it mostly existing homes, or you guys, are they building there?
They are building here. The only homes, as far as listings, new listings that show up on the MLS are spec homes. So So a builder may have, like 100 homes in a tract, and he may have 5 that they list on the MLS just to get you in there.
Oh, got it.
And so it's kind of really hard to track it. You have to look at building permits and stuff. But I just simply, share this screen here, which is what I pull off of the MLS every morning, and just show you that, the black line here on the bottom is new contracts. See how it's just flatlined?
Yeah.
And these are new listings, not active listings, but new as they
Oh,
come
okay.
on. So I
Got it.
I track new listings and back on market for the ones that said, okay, I'm going to go ahead and put my house back. So you can see it just a little slight uptick over the weekend, which was
Oh.
surprising to me, that you usually don't see an uptick on new listings on a Monday. So it doesn't really mean anything. It just means we're going to muddle along. But the gap you can see between the two is growing, and it's growing slowly. And that's why I had a video out, a few days ago that said, will we hit 20,000 listings? And statistically, Dan, if we look at it today and we're adding about 400 a week to our total listing account,
Mm-hmm.
well, it only takes 20 weeks to go from 13,000 to 20,000.
Yeah.
Of course, everything has to stay the same, right? Sales have to stay that way. They go up 400 a week. And so I just kind of raised the question and said, could we? But rates, gosh, we got up to 7.6, and then
Yeah.
now we're back down to 7.44.
In the market was really good this morning. And just overall, the uncertainties in the market are what's even actually starting to freak me out. Because last Friday, when you were thinking the federal government was going to close down, rates actually retreated about 1/8% in that day. And then we got the government, salvaged itself. And then all that data came through. And then pre-market, the Dow was way up, the NASDAQ was way up, bonds were looking real good. And then the market opened and everything just went bad again. So, I mean, you just have this whole just cloud over not only housing, but the whole economy. You have the federal government. It's just pointing fingers like they always do. Nobody's trying. There's no resolution anywhere. But one of the biggest things that I'm still, and another piece of this puzzle that's freaking me out is student loan debt. And we talk about this all the time, but I don't think, I see applications every day. We got applications every day. I just worked on 4 of them. And the amount of student loan debt, if you don't have any, you don't fathom how much student loan debt is out there. And I did a report last week, and I think I might even mention it on your channel, is there's between $7 and $8 billion a month now that's going to be reallocated from, entertainment, savings, buying stuff, shelter, food, services, everything else. Now it's going to be completely diverted over to student loan debt. And that's 7 to 8 billion a month in money. So when the Federal Reserve says, hey, we want, the consumer to start slowing down, well, they're not really not spending, or they're not cutting back on their spending. It's just where that allocation of money is going to go. And the student loan debt is, the Fed isn't stupid, but how they're not seeing this part of it. But conversely, the government debt is crazy. So what the average person out there has to realize is, the interest in the payments on your debt that you're seeing, especially housing, if you're looking to buy a new house right now, or credit cards and whatever, how much has that gone up? Well, now, extrapolate that out to the government level, when they're, trillions of dollars in debt, when that debt servicing numbers start to uptick because of the rates are going up, it's devastating, to say the least.
Well, but then you go back and you look and you go, we hit 7.6 for one day. So there probably weren't a lot of loans being locked in at that point.
Yeah.
They did come back down, but, and yet prices are not falling.
There's just no supply, and everybody's like, well, the supply piece is a farce. Well, unfortunately, it's not a farce. I wish it was, and so many people asked for, hey, we need, the housing market to crash. I need to buy a house that, I can afford, and so forth. Well, you're seeing the housing market crash, but there's just nothing there. So now you don't have bidding wars, but we still have bidding wars. If it's a house 250,000 or less, People are still, there's multiple bids. I was in Ohio this weekend for a wedding, and the house is there. I talked to several people. They're like, our house values, they're nice and steady, and the tax rates here are good. Income here is, our incomes are stable. So it depends on where you go in the country. I'm from a little town called Fallensby, West Virginia. And it's, my mom's house is about $250,000, $300,000. It's a nice brick ranch. Her taxes are $1,500 a year. So it's 45 minutes from Pittsburgh. If you have a house back there, it sells because people will commute back and forth to Pittsburgh. But, a lot of people, so if you want an affordable house, they are out there. But you have to, you can't be in Austin. You can't be in San Francisco. But there are places in the country that if you're a remote worker and you just want to kind of settle in somewhere, there are a lot of places right in the middle of the country and east that you can go to.
So what's happening in Austin? I mean, they're like an anomaly right now. Why? I mean, I get it. Their prices are coming down, but did they come down because all of a sudden more inventory showed up? And if it did, where did it come from?
The
And
building
it's not
is
happening
nuts.
in Phoenix.
Building is nuts down in Austin. It's nuts. Like I was in Florida a couple weeks ago from the airport, and I've been going down there for 30 years because I have a place down there. From the airport over to Cocoa Beach, that's where I have a place. There's a lot of building, and I have never been to Austin, but when you talk to people in Austin, I have a lot of friends that live there, and a lot of my kids have friends that live there that have bought houses over the last 2 or 3 years. And they're like, I'll buy in a crappy neighborhood 2-3 years ago because it is up and coming, because they are building everywhere. If you have a little house that doesn't fit in, that's teared down, and they're building up. So, if you want to, paint the narrative of the housing market's crashing, Austin, unfortunately is that market, because they've ramped up so much, and it was well needed. But now with rates hitting where they are and people are like, I just can't afford that anymore, you're going to have a pullback in prices. And that's where I'm not always cheerleader of real estate. I said, I did a study on Austin not too long ago. Their home values are up 200% in the last 10 years. That can't be sustained.
Yeah.
So, when you have a 10% pullback in 1 year, I'm not sitting there crying, because it's like, guys, you just had and a lot of people haven't had the house for 10 years, but we're always saying, and I always say on my channel, if you want a fast return, don't buy a house. The average house is going to return you maybe 4 or 5%, 6% in some categories, but it's shelter. It's a building of equity, a building of wealth. It's just over time. It's like barbecue, low and slow. But if you want to just, buy something and have it go up 20% in value, God bless you, but buy cryptocurrencies or some other thing, but you're not, you shouldn't get it out of housing, I guess is the best way I can put it.
Yeah. And I look at our median sales price here in Arizona, and you can see that, how it just went like this, right?
Yeah, that's
And then
barbecue, low and slow, and then bam.
and then bam, it went up. So, but if nothing had happened, where should we expect ourselves to be?
Yep.
And maybe it is right there. But nothing ever goes in a straight line anyway. So if
Right.
you're looking at people are going, well, I want to get pre-pandemic pricing. Well, that would be right here. I don't see us getting to that level.
Right.
I
You would
see
just
us,
have to have a massive sell-off,
I
or
see us getting
way
here.
oversupply. Yeah, I do too. Yeah.
I don't see it getting there by lunch, but I see us eventually
It's funny
getting
that
it.
you
It's
did
not
that, because
alarming.
that's exactly how I did my analysis at the beginning of the year when I came in and says, I knew people weren't going to be forced into selling their homes like they did during the crash, in 2006. And that's what everybody pivots around, but they usually don't explain the whys behind it. So I'm like, there's nothing really matches in the dynamics of anything other than house prices went astronomically high in a lot of areas. But you can't say, okay, well, they went up, some areas hit 20% a year in appreciation over the last year. So the only other time in history that did that was 2008. So now we have to put those correlations together. You don't. What happened the last time we had the whole world shut down of COVID? What happened to prices, back in Oh, it never happened before.
Yeah,
So
that's right.
we don't know, and it's okay. Like I tell my kids, it's okay to say you don't know. But for everybody to come out here and say, the housing market is going to crash, or even on our side, I don't know that the housing market will not crash. But the
So wait,
fundamentals behind it.
you're saying there's no data on house prices and the Spanish flu?
Yeah. Yeah. So that's what I get. And I was answering questions. So if anybody watches these videos on my channel, I answer usually when you post the first question or comment in there. I usually go in there and comment either thank you, or if you disagree with me, or give these counter data. I'm always like, please share the data with us. I want to learn if I'm completely missing something here. But you don't have the dynamics that were in place back in 2006, which were subprime mortgages. That is the reason. That's the primary 99% reason that everything crashed at that time. Banks were crashing, investments were crashing, and houses, everybody was just throwing their houses on the market because they had to get rid of them because they couldn't afford the payments. If you're in a house now, you probably have a sub-4 rate. Yes, your taxes and insurance might go up a little bit. Some areas it might go up a lot, but it's your loan payment isn't moving at all. So, if you're renting and your landlord's real estate taxes just went up and their homeowner's insurance just went up, well, they're obviously going to move that increase over to you, the renter. So you're not, sheltered from this as well. So, but the dynamics, and everybody keep talking about, well, in 2008 it crashed. It's good. It has to crash again. Those just don't add up, unfortunately.
Yeah, it's still out there. I mean, it's just right here in front of everybody's brains. And my comment was always, it's like your car. Just because you're going fast doesn't mean you're going to crash.
Yeah.
So I think so. What, as we look at this week, do we have any numbers coming out? Because it was interesting as I was looking last week and said, well, if we do have a federal budget shutdown, government shutdown, there won't be any numbers coming out.
Yeah.
But
Yeah.
now that they're kicking the can gleefully down the road,
45
are there
days.
numbers we can expect this week?
Yeah. This week's numbers, we have the JOLT number coming out tomorrow, if I recall. It's how many job openings. That's going to be interesting. We have jobs report, wage reports, and everything. But unfortunately, you have to throw a lot of this out with the bathwater, because in the forefront of everything is, I've never seen it, and you and I aren't young. When's the last time you've seen so many unions organizing at one time striking? I mean, you go in the news today and you have
the late 70s, early 80s. If
So
you were to compare this market to something, Dan, I'd go back to 1983.
Got it. Hey, that's when I graduated high school.
When you look, you beat me by, you lagged me by 10 years. Yeah, I'm so old. So if you look at the numbers, you go back and look at the charts, and you look at, now, granted, interest rates are 18%, but the impact on pricing, and when you look at where home prices went and where they're starting to go now, it almost, get away from 2008, folks. Go back to 1979 to 84.
What happened?
Take a look at what happened then.
I haven't done that analysis.
Well, it'll blow your mind. You can almost layer the two charts on top of each other. And then the thing is that back whenever you have inflation, the unions push back. And so, but now it's reaching this peak, and you've got the United Auto Workers. I mean, what they want, a 40% increase. And the push for electric vehicles are going to push a lot of them out of work anyway. So they're trying to grab what they can before the doors close. But you see California just passed a $20 an hour minimum wage for fast food. So McDonald's is hurrying up and getting those robots, putting them in there. They can cook your French fries. You can order it at Kia. So
that's what my son does. He works for Berkshire Hathaway, a Berkshire Hathaway company, and he's been creating. He heads a team right now that's trying to create basically a hamburger machine that one person operates basically the whole day. And he says, and he's young. All my kids are in the mid to late 20s, might have just hit 30. And they realize it too. They're like, we can't afford to pay some, and if you work at McDonald's, this isn't a bash against you. But to be at a cash register or just putting hamburgers in a bag, you're going to have a tough time of, putting a family together and feeding them and sheltering them and so forth. But I don't think it was ever intended for that.
No,
So
that job, that first job is the job where you get to learn how to work with people. It's
right.
a job where somebody teaches you some skills. I mean, I was working in a gas station when I was 15, and the gentleman that owned the place and his brother was a gas station, and I had to pump gas and wash windows, and then
Yeah.
and we had uh, two registers, little tick tick tick,
Yeah.
had to add things up that way, and that's the job where I could maybe buy a car. I was living with the folks because I was 15,
Right.
but I
Yeah.
knew when I was 16 I wanted to buy a car, and that was the job. After I bought my TV for $20, but that was now this narrative that says, well, you can't feed a family of four. Well, no, you never could.
Yeah. Yeah.
You
That
know,
wasn't the intention, I think, of certain jobs.
yeah, and it was, but you learn so much. I mean, there was one guy that says, you never say after you ring him up, is that it? You always go, will there be anything else?
Right. Yeah.
Just-
Yeah.
you might want to get that
You
extra
just
dollar out of them.
you learn how to get up. You learn how to get somewhere and be on time. You learn how to interact with people. You just learn stuff, that schools don't teach you, didn't teach you then, and they still don't teach you today.
Well, I ended up
Um,
being a short or a cook in a restaurant in Denver, and I went and was applying for the job to drive a bread truck, right? And they said, well, what kind of skills do you have do you think could relate to this? And I said, well, you ever cooked hamburgers and scooped ice cream? And they go, no. And I said, I didn't think I'd ever get that skill set down, but I did. But what it tells me is I can learn anything.
got it. Yeah.
And so it has nothing to do with driving a bread truck, but just because I don't know how to do it doesn't mean I'll never know how to do it.
Yeah. Great point. Great point. Let me turn, if you don't mind, I know it's your show, but let me turn it around a little bit because everything is just so doom and gloom. If people are out there looking to buy your first house, now again, I'm not cheerleading buying your first house or whatever. I put out a video the other day, and about 2 weeks ago, I put out a video that I didn't think would do much, and it hit like 20,000 views. Then I'm like, I got a good video that I'm putting together, and it was basically after you and I talked, and we went over the 2-1 buy downs, and you said some people said it's a farce, and some people said this and that. So I figured I would put a video together on how I would buy a house or how I would have my kids buy a house in today's market. And basically, here's the thought behind it, or here's actually the video. If I were to buy a house in this market and I could qualify for this particular situation, here's what I would do. So we have a program that will allow you to buy a house with only 1% down. Now, a lot of people are saying, oh, that's, you shouldn't buy a house unless you got 20% down. You shouldn't buy. Well, let's assume you're trying to get into your first house. You don't have a lot of funds. Most programs, unless you're working with USDA and VA, you're going to need 3 or 3.5% of a down payment. So one of the programs is actually going to give you a grant for 2 of the 3%. It's basically free money. And it's hard for me to say free money because normally nothing's free. But there's no tax ramifications. There's no lien on your title. There's no payment, that's needed back and so forth. And, some people pull back on that. And then I said, well, another big element of this program is you don't have to pay PMI. And then a lot of the repercussions that I get back is, okay, well, you just jack up the rate because you can do what's called lender paid MI and all this other stuff. And I said, yeah, but that's not the case in this one. The case on this one, the rate is on average 0.23 higher than the average loan. So if you're getting lender paid MI, and we won't get into the huge discussion on that. Usually the rate is much higher. Okay. So you can get into a home with 1% down with no PMI. The PMI is going to save you probably on average about $100 per 100,000 that you're looking to buy. Okay. So now the other thing is how can you were just saying, there's a lot of houses coming, or there's houses on the market. House prices are starting to come down. But instead of, negotiating maybe lower prices for some of these things, which you can do, see if you can get a seller credit to get into the 2-1 buy down. It's a
Yeah.
way to buy down your rate for the first 2 years. And it's not really, somebody says, oh, it's not really buying down the rate. You're prepaying interest over here and things like that. Yes, that is 100% accurate, but your payment is reflective of what that 2% lower rate would be. And it gives you reprieve for at least 2 years. So then after that, everybody's like, okay, then you're going to have the market completely implode at that point. Well, no, not really, because you're actually qualifying at the higher rate and higher payments. So
Yeah.
you know what those payments are going to be, and that is capped. It's not going to move from there. But the Federal Reserve, the government, everybody's telling us the Federal Reserve is they're peaked out on rates right now. Rates are probably topped out. And most likely, if you look at the dot plot for the Federal Reserve and things like that, I know we're getting into economics, but if you look at the forecast of where rates are going to be a year or two from now, they're on average about 1.5% lower than we are today. So you're going to get reprieve here in the future. These things cycle. So if you're young in this market and you never bought real estate and you're seeing a lot of these channels, you're not locked in. Once you buy a house, if rates come down, you can refinance at a lower rate. So you have those opportunities for you. And then the other piece of that puzzle, what I was trying to explain to people is, look, folks, the housing market is not crashing. But if you want to sit on the sidelines and continue to rent, God bless you. There's nothing wrong with renting. But if you really would like to buy a house in this market, I even think, Rick, I think you have a link down in your description where, people can reach out to us and just kick the tires. See, can you qualify for a house with your credit score, your income? Do you have enough for a down payment? And we'll be realistic with you. We'll just say you don't right now. You don't qualify. But we'll put you in a path to say, okay, here's what I would suggest you do, and the whys behind it. So sorry for my pitch on that, but
no, that's okay. My middle son wants to buy next year, and only because he's re-upping his rent and stuff, and he figures that he's saving money like crazy. So he has a goal. He's going to buy next year. He's not waiting for the market to crash. He's saying, I'm going to buy next year, Dad. I'm saving. He's got a lease that doesn't come up for another year. So he's got a timeline.
Yeah.
And the program for him, something like that would work out pretty well. And now if rates are really high and you can get somebody to contribute a 2-1 buy down, the one, I kind of was going back and forth on those, Dan. I didn't like going into a 2-1 buy down because I don't like uncertainty. And
Same here.
but if I have a payment that I qualified for, and I know that in year 3 my payment's going to be X and I qualify for it, that's not uncertainty.
Right.
Now, can I refinance then? Well, that's uncertainty.
Yeah.
Because if you may not be able to refinance if the value's gone down too much, right? Or is that wrong?
Well, it depends. It depends on the loan product that you're in. So for example, if you're in a VA loan, a USDA loan, an FHA loan, they offer refinances as long as you have not missed a payment in the last 12 months and your credit scores qualify you. You do not have to requalify based on the home's value or your income. They're saying, okay, you've made Mr. or Mrs. Homeowner, you've made your payments to us in the last 2 years, you've never missed a payment. So the reason why you're refinancing is to save money, to reduce that payment. Well, you've never missed a payment with us in the past. So if we reduce your payment, it's only going to help you. So
that removes the uncertainty. I like that.
Unless you have a conventional loan. So in a conventional loan, yes, you are correct. But again, the uncertainty there is what your maximum payment's going to be. Okay. And then think about it. It's 2 years from now. Well, most times, and you see in the union laborers right now and everything else, most times you're getting a little raise every year. So if you got a 2 or 3% raise this year, a 2 or 3 or 4% raise next year, it's probably going to put your net dollars basically where you would be today. If you get my gist of it, a $1,400 payment 2 years from now probably might equate to a $1,280 payment today or a $1,200 payment today based on your income that you're bringing in.
Well, getting back to, have you ever seen this many strikes? And when I was driving the bread truck, you were paid a base pay plus commission. So I was consistently getting 9-10% increases in my income every year. One, because they would raise our base pay because of inflation. But inflation was also raising the price of the bread, of which I got a 7% commission on. So I was able to buy this condo, and I was really not that comfortable with the payment, but my wages kept going up. Then I got into a house, and we really struggled. We
Yeah,
just
same
scraped to
here.
get the money in there. But then my wages caught up in the 80s. And
Yep.
now the payment that I had on that was really no big deal. There were two of us working. Can that happen today? We've reached an affordability wall in Arizona. So it's like I wish I could say I could get into a house that stretches my payment a little bit that I could deal with. But the average person here, first time home buyers, going, no, it's so far out of reach, I can't even get in now.
Got it.
That's our problem here in Arizona.
Got it. Yep.
Because unless you drive way out past all the cactus. And so, they want to buy, but they just can't. So you just have no choice. You got to wait.
Right.
But there are people that are in a position to buy, and they are still buying enough to where the difference between the supply and demand is keeping prices where they're at. And I've never seen this many people collectively waiting to purchase.
So that also brings me back to FOMO. In the last 2 years ago, when everybody had to buy a house, it didn't matter if you were moving across country, everybody was moving somewhere, and they were remote working and they were doing their thing. But I just lost my train of thought. What were you just talking
that
about?
can happen. So
yeah, I forget what I was talking about.
No, it's trying, look, if it's not affordable for you, it's not.
Yeah, it just isn't. There's nothing. I had one young lady just mad at me because I couldn't get her qualified for as much of a loan that she could find a house. And I'm like, I'm sorry, I'm not the one building houses and all this other stuff. What I was getting at is there are parts of the country, which I was saying is I go a lot of places on weekends. My wife and I, we have weddings all over the place with family members and stuff like that. Every time I'm there, I ask people, how's housing here and how's how? Yeah, you get there some areas and they're like, dude, you can't. I'll be renting forever. The only way I can afford a house is if I move. Well, maybe you think of moving. I don't know, but so many people back when were moving all over the place. But if and when rates come back down, they're never going to be, I won't say never, but I don't ever see them. And I hope in my lifetime, I don't see rates 30-year fixed rates at 2.5 again, because the reason why that occurred was the whole world just imploded because of COVID. So, normal rates throughout history, probably 5 to 7%, which were a little bit higher than today. Once people get, used to that, I hate to say it that way, is it won't, we're so, addicted to that, where rates were and how cheap everything was, that when we're getting back to normal times, it's a little bit, it's hard. It's like just, snacking every night on candy. And then all of a sudden you realize you got diabetes and you got to stop eating it. It's like, it's hard. But then after, you go through that length of time, it's like, oh, okay, it's another lifestyle of mine.
Yeah, I had a comment on my channel once, said, I got a loan at 2.75. When do you think I'll be able to refinance for a lower rate? And I said, never.
Keep it. Well, that's why even, I have 2.625 on my house. My son, he has a house. He's at 2.625 too. I refinanced him when I did my loan. Now he's like, his income keeps going up. He works, like I said, for a Berkshire Hathaway company. He's an engineer creating machines for McDonald's and Burger King and Wendy's. And his income keeps going up and up and up. And now he's like, I might rent my house because my house payment is, it's under market rents. He's like, I can probably charge 2 times what my house payment is and rent it, and then take that overage and help me, help me with my new mortgage on a house that I'd really like to build. And so but again, it goes into that wheelhouse that house now is not going on the market to be sold. It's going to be rented because he has a tough time, walking away from a house with that cheap of a house payment, unless he needed the money for the next house, which he doesn't, God bless him, he can keep that house as an investment.
Well, I remember the early 90s when interest rates started going back down. This was before caller ID and before the internet. This is like 93, I think. And so lenders were always calling at dinner time.
Oh, I know. And I was one of the ones calling.
Gone down. every stinking day. Get through it got down to where I'd answer my phone and I go, "Hello, I'm happy with my current mortgage," and then they would just click. I
I
had
was
no
one
other
of
way to
them. That's how I made a living on the
well,
phone
yeah,
for,
you don't blame them, but
years.
you had to get the word out, right?
Yeah.
But I'm
Yeah.
thinking, if you don't know the rates have gone down by now,
Yeah.
I mean,
It's
but
amazing how some
every
people
time the phone
don't.
was ringing, it's like, is this
Yeah.
dad or is this a lender? Okay,
Yep.
hello, and
Believe it or not, if you watch a lot of, TV now and YouTube, you don't you as a first-time home buyer, you might not understand that you can refinance. I mean, the way that they make it sound like is you buy this house today at these rates and that's what you got forever. And it's not that way, and people just don't understand. And what drives me crazy, and we can leave it kind of at this: buying a house is a huge investment, and it's not just something that you just jump into, hope to God it works, and if it doesn't, whatever. It's a huge investment, probably the biggest investment you're going to make in your life. So you're not going to, or you shouldn't be getting astronomical returns on it, but it is intended for shelter for you and your family to live. And over time you will gain wealth. Not well, you might not get wealthy, but you'll gain equity into that home for some, is a possibly retirement piece of your puzzle in real estate at some point. But it's so many people just want those returns like this, and it's like, again, there's other
yeah,
markets for that. If you're looking to buy a house, I'm a proponent. I would say if you're not going to be there, it minimally bare bones 3 years. And if you don't know, then don't buy. When
yeah,
in
I
doubt,
couldn't agree
do
more. Yeah,
without.
yeah.
Yep.
Well, Dan, thanks for keeping us
You
updated.
betcha.
We're going to watch the job numbers this week. See what happens. I'm glad the government's hasn't shut down, and maybe I'm not too. I'm kind of torn on that one, but
Oh, it'll be, here's the bad thing about it. It'll be uh, just shambles for the next month and a half that we got to live through every day. And now all the politicians are going to jump in and everybody's at fault. And then you look at it and you're like, well, you've been in government for 20 years and you haven't really done anything.
yeah, there's
But
going to
you're
be a
blaming
lot of this.
politicians. Yeah, you're blaming politicians, but you've been basically a politician your whole life, and it's still messed up. So who you really blaming?
Yeah, no kidding. Jeez. Oh well,
So,
that's a whole nother show.
yep.
Well,
All right,
Dan,
man.
thanks for joining me,
Appreciate
my
it, buddy.
friend. Take care.
You
Bye.
betcha. Take care. Bye bye.